morning. And if you don't mind, I'm just going to start asking questions because this is the purpose why you were here. Because many viewers want to know many questions they have, the answers from Street Capital Financial. Street Capital Financial is already well known for our viewers. And since last interview in December 2012, we had a very tremendous success with that interview. Street Capital made a lot of exciting news. You did this news in the financial world, and you introduced very interesting, some of them unique mortgage programs for our viewers. And if you could just have a chance to talk to us about the new programs and what kind of news you made, because we know about CMHC news, we know about banking news. That's what very good for us, for our viewers to know about Street Capital.
Sure. Thank you. Good morning, everyone. Good morning.
Good morning again.
We've been quite busy at Street Capital. When I was last on your show in December 2012, we talked about a stated income program that we wanted to introduce. So we introduced that earlier this year to help self-employed borrowers or commissioned applicants who could not provide traditional sources of income to qualify. So that was one big initiative that we undertook. The second large initiative we undertook was to open up a Calgary underwriting center. We're coast to coast at Street Capital, so we have lots of mortgage brokers and customers in the Midwest, being Alberta, Saskatchewan, Manitoba. We thought it would be important to put an underwriting center in Calgary to service those customers and understand their market better. The third thing that we've done at Street Capital is we have obtained our approval as a CMB seller and MBS issuer. And what that means is that we can access the securitization market directly for a lower cost of funding.
And you can pass that savings on to our club.
To the borrowers when needed. Yes, exactly. The fourth initiative that we undertook, and this happened in December of 2012, which I think will be of particular interest to your clients and to the viewers, is we put in our application with the Department of Finance and with the Office of Superintendent of Financial Institutions to become a bank. Right now we're known as a mortgage bank, which means we just provide mortgage products to you. When we become a Schedule I bank, we'll be able to diversify the products made available through Michael and Dennis to their customers. So it'll be broader in terms of different retail products that will be made available to customers.
It's very important for our customers. And Paul, we have to interrupt you for a second because Dennis has to make a translation.
Sure.
Before we're going to get to the Street's special mortgage programs, what you mentioned, can you please share your opinion about the Canadian housing market and government involvement in mortgage regulation on that market? It's very important for us for everyday life.
Certainly. Good. It's an important issue. I think the mortgage market in Canada is still very, very healthy from our perspective. We're not seeing any issues or concerns with arrears, which is usually the number one concern any financial institution would have, is if clients cannot make their mortgage payments, we certainly have a problem. But we're not seeing any signs of delinquencies or forecasting a substantial amount of increase in delinquencies. Overall, it's a very large market, and I think a lot of viewers might know this, but I'll share the information with you. It's over $1.1 trillion in mortgages outstanding. So it's a very, very large market. In fact, almost 70% of Canadians have home ownership. So there's a high ownership rate, probably higher than in the United States. And amongst the G7, it's something that we as Canadians can be very proud of. The important thing to understand is that while there's lots of mortgages in the marketplace, I think for a period of time there was too much exuberance and I would say aggressive type of lending, particularly to those customers who perhaps weren't able to manage their credit properly. And I think that's where the Department of Finance had to become involved to regulate and to control the housing market. Otherwise, we would have experienced what happened in many of the other G7 countries, which was a price bubble and then a huge price correction. We know what happened in England, we know what happened in the United States and various other countries. And without government intervention and involvement in regulation, I think we could have faced similar situation where we would have seen a rapid increase in prices and then a decrease in prices, and that would have ultimately affected the overall economy in Canada. So we're still very optimistic, although we forecast, from our perspective, a slower mortgage market. We think that the mortgage market will probably be about 2.5% to 3.5% growth, which is substantially less than what we've seen in the past. We think that while that's certainly a lot slower than perhaps many of us in the industry would like to see, it's probably responsible given where we are in today's marketplace.
What do you think about last CAMP findings? CAMP is our association, Mortgage Brokers Association, that government had tightened mortgage rules a bit too much, and it might cost us, I mean the Canadian economy, 150,000 jobs in construction and related industries by 2015.
I think that's certainly an important study from CAMP. We're seeing signs of a slowing market. We all have read the newspapers, and we've seen that the market is slowed down about 9% year over year from last July. However, I think the important point to understand is that the Department of Finance, and in particular Minister Flaherty, is trying to balance the market. So on one side, he's got concern, as we all would, as homeowners, as people in the industry, that we don't have an overheated market, like I was talking about, where we have a price bubble and then a huge price correction and a housing crash, like we saw in 1989. On the other side, he needs to ensure that whatever regulation he introduces is not over-regulation that causes a policy-induced correction. So it's a very difficult balancing act to introduce. I think the CAMP study certainly has its viewpoints forecasting into the future. Obviously, we're seeing a slowdown in new construction starts. Obviously, the demand for mortgage credit has slowed down, but it is not stopped. There's still a fair amount of activity. There's a lot of new construction still going on in Canada, and there's still demand for mortgages because clients are planning on refinancing or they're planning on buying a new home. So we're still in a healthy market overall. I don't think we're faced with the crisis for many of you that might have been in the housing market in 1989, where we saw almost 25% correction in prices, and that was dramatic. And that was substantial.
That's what we don't want.
We don't want that.
Again.
So I think at this point, based on what I've read and heard from Minister Flaherty, is that he's quite happy with the way the market is now performing. He's seeing, as I said, a slowdown in new construction, but not a stop in new construction. It's still a very healthy new construction market. As well, he's seeing a slowdown in overall demand for mortgage credit. So we might come into a market situation where there's less government regulation in the mortgage industry overall.
That means that, okay, you're an insider. This is a first-hand information from such a high-ranking officer as you are. Government doesn't have anything more to tighten the market mortgage rules?
Well, there was some discussion and a lot of industry discussion actually a few weeks ago about changing the amortization, particularly on conventional mortgages, and reducing it down to 25 years from 30 years. And there's maybe one or two lenders offering 35, but nobody substantive. I don't think that is in play right now. I think that if there is going to be any changes, the Department of Finance will be consulting the industry, because remember, they have a responsibility to ensure that our financial institutions are very sound and that the right controls are in place so that there's no risk exposed to not just the Canadian government, but also to us as citizens of the country. The last thing we need is for our banks in particular to have challenges like we've seen in Europe. That's the one thing we want to avoid. And so I think at this point, if there are any changes with respect to regulation, there'll certainly be a lot of consultation, but based on what I said is that there's a slowdown in new construction. We're seeing a slowdown in the resale market overall and a slowdown in terms of demand for mortgage credit. So I'm optimistic that there won't be any increased regulation in the near term.
What's your position now in CAMP?
Okay, so there's CAMP is the association of Canadian Association of Accredited Mortgage Professionals, so it represents predominantly mortgage brokers and lenders and insurers that work with mortgage brokers, over 13,000 members. I am part of the charitable side of CAMP. It's called the CAMP Foundation. So what we do is it's really a non-for-profit organization. We provide scholarships to young students. As well, we're engaged in different other activities, such as introducing a textbook into Canadian universities on the Canadian real estate market, so that there's an increased awareness really around financial literacy and around the real estate market overall amongst young Canadians, particularly those in high school as well as those in their undergraduate program.
Okay.
It's very important. And you're past chair of CAMP.
Yes, I'm also past chair of CAMP.
Next question, just to finalize with that, regarding condo market, are you, as a street capital, as a lender, have any kind of tightening concerns and tightening your lending practices for the condo market?
On the condo market overall, we haven't made any changes because when we look at our overall mortgage portfolio, we don't have a substantive amount of mortgages in the condo market. What we do is we actually follow the insurer guidelines. So when it's a high ratio mortgage, we allow the mortgage insurer to establish what risks they want to take on a particular condo. So we haven't made any changes with respect to the condo market overall. We're still providing financing for it.
We're going to continue with our questions because we have
just very short question, sorry. Soft landing or hard crash? Very short.
Okay, very short. I'll give you my viewpoint.
Yeah,
I think we're going to see a soft landing. There's no signs or indication that there's going to be a hard crash. As I said, it's not an easy task for the Department of Finance, in particular for Minister Flaherty, to ensure that he introduces the right regulation that doesn't halt the overall mortgage market. But at the same time, we've got a strong employment. Interest rates are still very, very low. You're seeing signs now of the U.S. economy pulling out of its challenges over the last several years. So I think when you look at all those factors overall, I think we're still very optimistic about the health of the Canadian economy, the health of the mortgage market, and we're forecasting a soft landing, which means that we're not going to see the rapid price appreciation that we've seen in the past with respect to homes, and in particular on the mortgage lending side of business. It certainly exposes any institution to risk. So we're going to see much more of a balanced market. What we're seeing in terms of a trend, obviously, is that the larger homes, we're seeing more price corrections on larger homes. People who are in very, very expensive homes who are planning on selling them, they're not selling as quickly, and the price that they're asking for isn't exactly the price that the buyers have in mind. So that's where we're seeing some price corrections substantially across Canada.
Yeah. Now, enough for general about your mortgage product. That's what you introduced recently, self-employed, stated income, high ratio stated income, and what you can offer for the self-employed borrowers with not perfect credit rating. That's very, very important for us because many of our viewers, many of our clients, they choose to open their own small business or became a sole proprietor because they're very entrepreneurial, and it's a growing portion of our clients, and it's a growing portion of Canadian population.
Okay, so it's an important segment overall, obviously, in the Canadian market because there are a number of very successful entrepreneurs. And so what we decided was we needed to introduce a self-employed stated income program, as well as a program for someone who was on commission-based income. So what we have done is up to 65% of the value of the home, we can provide financing at best rates. So that means the lowest rates available, we can provide financing for those customers. Now, typically for those borrowers, they have better credit, and I'll talk a little bit later about those that have challenge credit, what solutions we have for those borrowers. But up to 65% loan to value, the client's getting the best rate available from Street Capital as well. We want to provide what we call less hassle or no hassle income validation. So we want to make it easy for a client who's got substantial equity in their home to obtain a mortgage, particularly when they've got good credit. The second program we introduced was someone who needed a mortgage from 66 to 90% of the value of their home. And for that, the requirement's a little bit more stringent, but still it's a stated income program. We don't require a substantial amount of income verification to validate the income necessary to qualify for the mortgage. We offer everyday low rates with that program, and then we also insure all those mortgages. So we obtain mortgage insurance for those loans. So there's a premium that's associated with a mortgage that's 66 to 90% of the value of the home that we would offer to the customer along with our best rates.
We have a listener, live call from Vancouver, actually. You have an office in Vancouver,
We
right?
do have an underwriting center.
And she's wondering, her concern, there won't be a soft landing because government increased property taxes dramatically. Probably it's particular case she came with in Vancouver.
It's
not and she asking you to lobby
to lobby on her behalf to reduce the taxes on her property. But I believe it's my opinion because the taxes went up because the appreciation of the value of the property that maybe people in Vancouver have. If the value goes up, then taxes going up. This is not situation, then
it's probably not your question. Just
not
what,
the situation you could fix.
If you're familiar with the issue.
I'm familiar with the issue, and obviously we're all familiar with the success that the BC citizens have with respect to the HST. Right?
Yeah,
so that was a significant initiative on their part. I personally am not a big proponent of overtaxing. I think overtaxing is certainly not a solution to our challenges overall. But from our perspective, who we would use to lobby municipal, provincial, and federal governments is CAMP, the association that represents mortgage brokers and mortgage lenders, because they have a strong voice at all levels of government to take forward any issues related to regulation or increases in taxes. And they've done so in the past, and that's who we would approach.
And about the clients, self-employed clients with not the perfect credit, would you have a program for these clients too? We
do, and I just wanted to add on something that I believe you were talking about.
Yeah.
Because I understood parts of it.
You speak Russian, I know.
I eventually will. The most important thing is for any self-employed borrower is to provide as much information to the mortgage broker as possible. So what we'd like to understand is, your gross revenues, how many employees you have, the size of your operation, a description of your business, perhaps in a bit more detail. What we're trying to get a sense of is, is it a large-scale business, number one, or is it a type of business where there's a tremendous amount of cash being exchanged? That can certainly help us in terms of making an overall decision on the credit application. I think, as Michael was saying, we don't require financial statements. What we'd like to see is, T1 generals or a notice of assessment or a declaration signed at the lawyer's office that you don't owe any taxes to the government overall. But in terms of building the overall story on the mortgage application, what we want is for you to explain the complexity or the scale of the business overall, so we have a better understanding of the business that you have, so we can make the right decision and obtain an approval for you. So the more insights we have into your business certainly can help us make a very fast approval for you and through Michael and Dennis.
I'm going to continue because not so
let
much.
me answer the question.
Oh, exactly. That's what my question.
So for those customers who have, let's say, perhaps some challenges with their overall credit, we have a program that's available through Dennis and Michael called the Options Program. And that's also designed for a self-employed borrower who has stated income. And what we're looking for typically here is a 65% loan to value. We have broad lending areas, so we're not just restricted to downtown Toronto or GTA market overall. But more importantly here, what we're looking for is really an understanding of what happened with your credit, right? So a story is really important. It could have been, for instance, an illness, or it could have been something else. We want to understand what the story and challenges were over that period of time. It could have been a family situation, absolutely. So if your credit was affected for a short period of time, and that's obviously indicated on your credit bureau, we need to understand that. So that's where you need to provide your explanation and your story to Dennis and Michael so that we as a lender can make a proper evaluation overall on the application and say, okay, that makes sense. Yes, we understand that there was a death or an illness or something else, a family matter that occurred, but the rest of the credit, if we examine it before that period of time and after that period of time, was good. So we can make the overall assessment, because remember, the credit score, while it's important, doesn't tell the overall story. What the overall story is what you are doing during that period of time that you need to explain to Dennis and Michael.
Thank you for this, and we're going to go ahead because we don't have so much time left. Okay, Street Capital offers its mortgage products solely through carefully selected mortgage brokers like me and Dennis. How do you rate your relationship with brokers community?
Okay, so let me explain why we don't deal with every mortgage broker in Canada. Number one, we need to have a very trusting relationship with mortgage brokers. We want to ensure that the mortgage broker that is representing us as well as the customer is a professional. And there's lots of mortgage brokers in Canada, but not to the extent that meet our standards. We have very, very high standards, so that's why we're very selective in terms of the mortgage brokers that we deal with, and that's why we do so much business with Dennis and Michael, because there's trust, there's integrity, there's professionalism. They're representing your best interests as well as ours, and that's very important in any business relationship. Street Capital, I believe I shared with everyone last time, was launched in 2007. In fact, we just celebrated our 6th year in May of this year. So we've been in business for 6 years, and we've grown substantially because of mortgage brokers. Our overall mortgage portfolio of mortgages under administration is at $13 billion, and we're growing substantially. And it's all because of the relationship we have with professional mortgage brokers in Canada. And mortgage brokers are our only source of business. We don't have a branch network. We don't have mortgage specialists in the marketplace. Our mortgage specialists are actually the mortgage brokers who we rely on, who are truly our business partners. And because of the relationship and partnership we have with mortgage brokers, we are now the 3rd largest lender working with mortgage brokers in Canada, which is something we're very proud of, and we're very appreciative of the mortgage brokers.
Within a short period of time, where you became a 3rd largest mortgage lender.
That's a huge, in 6 years.
Huge achievement.
Yeah, thank you.
And the question for you, because you're working through mortgage brokers and you don't have branches at the corner, how are you going to service post-funding after client got your mortgage? How are you going to service it? Through internet, through servicing department, through us, brokers. Will you allow us as a broker to do it?
Yes, so that's a very important question. So let's look at Street Capital as it stands today, Street Capital Financial Corporation. We have a website which all of your clients have access to. They can access their principal balance, they can make prepayments, they can change their payment frequency, they can find out if we're collecting property taxes, what the property tax situation is. They can review their overall principal balance. So that's one method to access information with respect to your mortgage, because it's all available online, it's secure, it's under your name and your own password in order to access that information. The second option is to provide Dennis and Michael with your authorization to represent you, and they will in turn contact our servicing department through our call center and access any information that you require with respect to your mortgage. Now that requires a consent form from you, which you can certainly sign at the time of the commitment or at the closing transaction, or even post-closing after the mortgage has been funded, and provide the authorization to Dennis and Michael to act on your behalf when it comes to the servicing of your mortgage afterwards, and any questions or changes that you'd like to make with respect to your mortgage overall.
And to tell you honestly, we're always encouraging clients to come back to us, and if any mortgage questions, if any needs to do something with your mortgage, please come and we'll do it for you. Why? Because we want to do it proactively. If any problem, it's too late. It's much harder to fix the problem than to do everything right from the beginning, from first time. You know, if the client has some kind of questions or problems, or just asking, can we switch the payment frequency from monthly to bi-weekly? Call me and I'll do it for you.
Right. And in the future, when we become a bank, and we're offering your clients other products. So right now we obviously offer the residential mortgage product. In the future, when we offer a line of credit or a loan or a credit card, once again, all that information will be available online. So we will not have a branch network. What we will be using is mortgage brokers, obviously, as well as the website. So for all of your clients who are interested in perhaps obtaining additional products from Street Capital in the future, once we become a bank, all that will be accessible for them online as well as through a call center. So once again, it's cost savings for the customers because we don't have the expense of having retail branch operations, and we can pass that on to the borrower, to the
borrowers,
customer.
yes.
Will we have some incentives compared to website?
There will be, but right now what we're working through is really the approval process with the Department of Finance and OSFI, so we're not as focused on the detailed launch strategy. We'll probably worry about that next year.
We had a question over email. What's the maximum allowed amount to prepay on street mortgages, to pay mortgage faster?
20 and 20%. So you can make annual payments up to 20% of the principal balance, and you can increase your payments by 20% to accelerate the payoff of your mortgage loan.
Is it different between fixed and variable rate mortgages?
No, it's the same. It's 20 and 20. Yes. Thank you.
You brought something.
I brought something which is an award of excellence from Street Capital. This is a surprise, actually.
It was a surprise.
We award this to selected mortgage brokers who really represent, as I was saying, professionalism, act on the best interests of the borrower, and act on our best interests. And given the amount of business that we've done with Dennis and Michael, we thought it was appropriate to provide you with the award of excellence on behalf of our company. And we appreciate our business relationship. We appreciate the support. We appreciate the after service that you provide to your clients, because we know that's very important for you to take care of your clients. So on behalf of Street Capital, thank you very much. Thank you, Dennis.
Careful.
And I will provide this to you.
Thank you. Do we have to show this? Okay, it's. I don't know how to do it.
Вы увидите у нас в офисе, мистер Grewal наградил наш от компании Street Capital. Это очень приятно, неожиданно.
Наш офис наградил.
Наш офис,
учитывая, что там, it's more than $100 million already arranged with Street
More than 100 million, but I think the most important thing to think about is that with both Dennis and Michael, given their stature with Street Capital, they know everyone within the company. So if they need to get a hold of the president, the CEO, or the vice president to resolve any issues you have, that's the relationship we have with them. So I would encourage you to share that with your friends or family and provide more business to Michael and Dennis.
We very much appreciate our relations with you and with entire staff of Street Capital, and that with Eric says very much accessible. We can just resolve any questions, any issues almost immediately.
Yes.
Depends on the volume, but it's very important for us, and it's probably very important for Street Capital too, because to have loyal clients and loyal brokers, it's what our goal is.
Exactly.
Thank you very much, Mr.
Thank you very much.
Thank you.
И всем, кто желает, пожалуйста, звоните, мы всегда для ваших услуг.
До свидания.